Hey everyone, Sam here. I should be able to, sound should be fine. Be able to see the screen. Let's get started. Good to see everybody. Welcome to another session of supply demand zones that work. Let's move forward. My name is Sam. If you're new to these sessions, I developed the original supply demand strategy many years ago, back in the mid-90s, on the trading floor of the Chicago Mercantile Exchange. These sessions are meant to help with people who are confused at all about supply demand strategy. And I know there's a lot out there now. And so the goal of these sessions, again, to help eliminate confusion and just help anywhere we can. So let's do that. How you doing? Thanks for staying up in Indonesia. All right. Good to see everybody. I am a licensed fund manager. The Pinnacle Institute is not an investment advisor. And trading and investing certainly does not come with a guarantee of success. In fact, available research does strongly suggest that most active traders lose money, right? Most day traders are not profitable. So we know that. We talk about that quite a bit. I've done YouTube videos on that. I don't think people talk about that enough because, you know, if the majority of people are losing money, that should be a big topic, and you should dive into why. So done some videos on that to help explain why that might be happening. So if you get a chance, you can always check those out if you want. And today's topic, we're going to use again for all these supply demand zones that work sessions. We use trading opportunities that we found out of our live trading and analysis sessions, the screenshot that you see on the left. And these are all, we always use ones from the prior day or that week. Make sure they're recent and keep up with the market here and all that. So last week and then still into this week, the markets like Apple here hit a high probability demand zone all the way down here. Okay, so it's a high probability demand zone that we hit. And over last week, there was a pretty strong rally from that area. So let's talk about profit zone. What suggests that if prices get down to this demand zone, they're likely to turn higher and prices likely to move, back all the way up to here? Well, what we want to look at for that answer is the middle. Notice at the time price met entry here, price had been through this area 1, 2, 3, 4, 5, 6 times through this area, okay, since the supply zone was created. And then, of course, the demand zone has been here the whole time, right? So the more trading that you have in the middle, in other words, the more actual transactions that take place, okay, the less likely that, or the easier it is for price to move quickly in the opposite direction after it hits this high probability demand zone down here. This is an A zone for us, by the way. Everything we do here at the Pinnacle Institute, based on the original supply demand strategy rules, everything's 100% rule based. And in those rules, we have A zones and B zones. That was a designated A zone. Now, take a look over here at the chart. Notice for a lot of people, this is where people get confused. They see drop, base, drop. They think that's a supply zone. They see drop, base, drop. They think that's a supply zone. Right here, they see drop, base, drop. They think that's a supply zone. These are not qualified supply zones. These would never qualify according to the rules. Why? Because they're in the middle. They're right in the middle of fair value, okay? Meaning the supply and demand imbalance in that area is likely to be small. Okay. Same thing here with NVIDIA, another stock that has rallied strong over the past few days, all starting from our A zone, our A demand zone down here. That's a high probability demand zone. based on structure and location rules, right? Notice by the time price got down to the demand zone, price had been through here 1, 2, 3 times since the supply zone was created, okay? Now, again, on the way down, you may have things that look like supply zones or a gap, but they're not. If they're in the middle, location-wise, those do not qualify as supply zones. Okay. I see the question in the chat about emotion. That's a great question. And really, you know, while I would argue that the rules and logic around the original supply-demand strategy are not that difficult and even quite simple, there's a catch, right? There's a catch. Like anything in life that seems too good to be true, this is one of those things, okay? While the rules and logic around all this are I would argue, are quite simple, the act of doing it or execution is not easy. That's where people have the hardest time. And you're bringing that up in the chat here, that word emotion, right? So that's where people have a tough time. Because if you think about it, our rules would have you buying NVIDIA when price looks like it's completely collapsing, right? People are not going to be comfortable with that. Our rules have you buying Apple, right? One of the biggest, most visible stocks in the world when it's literally collapsing. You're supposed to buy it here. That's not going to feel good for people, okay? But that's why we deal with facts and not feelings. We focus on, we make buy and sell decisions based on what's real, not what we feel. Does that make sense? Okay. On that note, wanted to touch on profit zone and help you understand why some zones qualify and others don't. And good little chat on emotions. Thanks for bringing that up in the chat. Hope that was helpful. And have a great rest of your day. We'll see you next time.